Now on the S&P, now moving to the S&P, and this is where I'm going to show you 3 wave counts. I think you'll find this very interesting. There's that same cluster of Fibonacci's up here. The interesting about the, and they're all figured using the same math on the same log chart. And then we have a fairly substantial dip going on, but once again, with no repins, Hurst is suggesting that we're getting the 18-month cycle trough about now. Now, that would be an extremely long 18-month cycle, and that's what David Hickson's problem is with it, because it theoretically started in March of 2020, and here we are in June of 2022. That's over 2 years long. Is it possible to have an 18-month cycle that's 2 years long? Yeah, it is. Hang on. I'm going to bring up Sentient Trader and one of my other monitors in case we need to refer to it here. And I'm going to just get a get a no repins model going on it so you can kind of see what's going on. So this is starting Jan of 1950. And this is one thing that kind of bugs me about David Hickson is he doesn't tell you what his starting date is on the analysis. And that's the starting date on the analysis is important because you can get different results if depending on the starting date. And so I wish he would just tell us what is the starting date of the data set he's using. It makes a difference. It says SPX starting Jan 1950, Hurst nominal model, troughs only, no repins. So this, we'll get this going in one of my other monitors, and then I will bring that over when it's done, and we'll examine it. So Hurst still hasn't said for sure this is an 18-month cycle trough because it's too close to the trough. It needs at least some kind of bounce out of there in order to, and I can see right now I was experimenting with that repin and so I'm gonna get rid of the repin with David Hickson's repin. I'm gonna get it back to it's just the default no repins analysis. So I'm still looking for a 5-wave up structure, and I still need a 5th wave up in blue. But one really interesting thing about the S&P is it already hit one of the large degree Fibonacci targets. This would be the target for the end of the 5th wave up from the 1932 low. Okay, but it didn't quite reach the burgundy target, and it still hasn't hit the black target. So there's the target zone. It has reached into it already. So that's something a little different on the S&P. And as we get into the weekly chart, you can see the 1, 2, 1, 2, 3, 4, 3, and then this really big blue wave 4, and the main count still looking for a 5th wave up into the upper portion of the target zone. I'm just curious. I'm going to take it out of Simlog so I don't crash the platform. I'm going to see if I can set a Fibonacci target in blue. Yeah. For the end of the 5th wave. And it's on up there a little bit. It's above the Fibonacci target zone. So if we were going to get a wave 5 up in blue, you would think something would have to change from the current situation that we have, something fundamentally or and as a trigger or something. Does anybody have any ideas of what possible thing might get the other than a bounce from a deeply oversold condition might produce a fifth wave up here to all-time new highs. Anybody got any ideas on what might be required in your mind in order for that to happen? It's kind of a fun question. Because, you know, at major bottoms, a lot of people they can't imagine what possible thing could happen. And one possible thing I think that could accompany that move to the upside would be an easing off of inflation. So that seems to be the most likely potential, you know, thing that would ease some people's minds. Equal 1 through 3. I'm not doing very well today. Through 3. Why am I? There we go. Times 0.382. So in order for to put together, if the bottom of wave 4 is in, you know, and put these in a smaller font. If the bottom of wave 4 is in, you might get a shorter than normal blue wave 5 if the wave count is correct, main wave count. Yeah, I'm easing off of price of oil. In other words, you know, inflation easing back. And I already showed you in that first set of charts that we have some indicators indicating that commodities are turning over. Yes. So there's the main and the alts, and they're built the same way. I'm calling this a potential leading contracting diagonal down as probably my most likely alternate count. And notice, here we go. Here's the Hurst analysis with no repins. First thing I want you to notice is these green dots over here. Those are buy signals, Hurst system buy signal. Green is a buy signal, red is a sell signal. So it is suggesting that there's some different points that could be bought along here, depending on if you want to get in on the early side or wait till it really proves itself. But notice it's putting the 40-week cycle trough in May of 2021. And so inside of each 18-month cycle, and notice that there's no stack of diamonds associated with that 18-month cycle. Inside of each 18-month cycle are 2 40-week cycles. Also, there's no stack of diamonds here because inside of each 40-week cycle are 2 20-week cycles. And that brings us to, that's the reason this nest is what they call staggered. It's a staggered nest because as time goes along, it's stretching out further in time before it finally gets to the point where the actual 18-month cycle trough is due, and it would be kind of in the center of this nest. And the composite line with no repins is bullish up through, this is early January. And it's bullish in what looks like 1, 2, 3, 4, 5 waves. So there's the no repins analysis. I want to explain to you why. That on my main count, I'm going with no repins. The main count is still it's still possible to get up into that original target zone on the Dow and the S&P. So now what I'm going to do right in front of your eyes is I'm going to do that repin back to the October low. Also, please note the composite line here. Now, it's not following price and perfectly, but it's done an okay job. I would say it's done an okay job with no repins of following price. Now, I'm going to, matter of fact, I'm going to take a screenshot of that. And that is a no repins S&P. Put it on the desktop, repins S&P. No pins Hurst. All right, we'll put that on the desktop so that we can go back and look at that. Okay, and then we're going to take the 18-month cycle and we're going to pin it to the October low, which is, I think, October 4. Yeah, going to pin it there. And now it's going to go through all of its stuff, but this time it's going to figure that that's where the last 18-month cycle trough was. And we'll get back to that in a second. Then, so look, from a Hurst perspective, if this is an 18-month cycle trough that is due right now, and that's you saw that the composite line was bullish from June 17 through early January. I zoomed in and came up with the date of Jan 9, that if the main count's correct, would move up into the Fibonacci target zone. If the alternate count is correct, we get a corrective move up after a leading diagonal. So we'll see who can answer this trivia question correctly about if your wave one is a diagonal, are you, what kind of retrace? Can you describe what kind of retrace you're expecting? Excellent, Greg. Deep. So a deep retrace is typical. That's Prechter's words from the Blue Book after a five-wave down, a five-wave leading diagonal. So what percentages do we look for if it's deep? What kind of percentage retrace? If we're looking for a deep retrace, just roughly. Anybody? I would say at least a 0.618, at least a 0.618. That would be the minimum. And according to Prechter in the Blue Book, it's between typically between 66. No, that's on a, that's inside of a diagonal. Yeah, I would say at least a 0.618 at a minimum. And it could be deeper than that, of course. There's the 0.786 for a super deep retrace. It could, but anyway, looking for a deep retrace after a leading diagonal, if the top is in, and that's a leading contracting diagonal. So you see, this is the same main and alternate that I showed you on the Dow. So here is the part that I think you'll all be interested in. It's different this week. This is, I believe, do we have anybody in the room that subscribes to Peter Goodburn at Wave Track? Peter Goodburn at Wave Track. Anybody? Okay. Well, anyway, yeah, Greg did for a long time, not recently, and I did for a long time too, and I'm not recent with it either. But you know, what he does is he'll put a little bit of verbiage, you know, on up about what he's thinking, and you can kind of figure out where he's going with things for free. He would hate it if I said that, but you can. You don't get all of his best information at all for free. You kind of get the beginning of his summary, and this is a wave count that he has had. I actually thought this was the wave count for a period of time, and the reason I originally thought this would be the wave count is because out of that March 2020 low, the move to the upside kept going until it was almost, matter of fact, it kept going until it was actually inside of my target zone that I already had developed and that I just described to you. That target zone would be right here. Okay. So it already got into the early one. But I was looking for a 5-wave up structure. And I was thinking maybe that was a 3-wave structure for a wave 1, an extremely long wave 1 of an eventual ending contracting diagonal. So by the way, if you are a money manager and you would really be interested in the stock market to basically staying up for several more years, this wave count may be of interest to you. Well, here's the thing, Tobe. These dates, what I put on here are no repins dates. So Jan 17 and Jan 9. Oh yeah, you're right. And then these little gray areas of arrows here are using David Hickson's repin. And so it's possible, that's the reason I'm showing this count. It's possible what's going on here fits in with David Hickson's count of a pinning an 18-month cycle trough here, and then expecting downward movement into mid-July, and then upward movement only into early October. But that's where it falls apart, because even with that repin, Hurst is very bearish from this gray area here all the way down to this one here. So that's where Hurst and this wave count disagree. But on the short term, where this would bottom out and where this would top, does work okay with his count. So and here's another thing that works okay with this count, really good with this count right here. Look at the wave count up from the low. 1, 2, 3, 4, 5 for wave A, wave B, a very short brief wave B, and then a 1, 2, 3, 4, 5. The only thing wrong with that count is that this looks like a 3-wave structure up into that high, but if you forgive that, here's something that really works great with that, and there's a Fibonacci expansion. So you measure up from this low to here, Fibonacci expansion, and then you consider that a unit of 1. You take that times 0.618, and on a Similog chart, you add that to the top of pink A, and you get a target, that pink dotted line there for the top of wave C of a zigzag, a 3-wave up structure. So if you want to believe that the move up, and I know I have one subscriber that's in the room right now that wants to believe that this is a wave 1, and now we're going to get a deep wave 2, and then we get a 3, 4, 5. That my main problem with someone with that labeling is, if you're going to do that, this first leg up needs to be a zigzag, and it needs to be wave 1 of an eventual ending contracting diagonal, and it would have the stock market maybe not topping until late in the year 2026, which is the way I've programmed it here. Here's the big problem with it. There is no Hurst analysis that supports this idea. None. Zero. But it supports it on the short term if you do that repin that David Hickson is doing. And then you would expect this to be a zigzag on the way down. And there is a way to count this move down so far as a 5-wave structure. 1, and then an expanded flat for 2, and then 3, And then 4, notice that I drew that little line there so you would see that the wave 4 came very close to moving into the price territory of wave 1. But if you put the wave 1 in this location here, it did not invalidate, and then you get a wave 5. And then and so this could be a 5-wave down structure. Can be interpreted as a 5-wave down structure. Why have I not been going ahead and counting it as a potential 5-wave down? Well, the reason is because I don't do that repan back here. If I've been doing this repan all along, then I could look for a 5, 3, 5 zigzag down, and this count would make a lot of sense. Now, this count, I don't think there's a way of making this count work with the Russell, not without breaking some rules. And that's one of the big reasons why I abandoned it. But this does look like an ABC to the upside. But guess what? What else can an ABC be? A 5, 3, 5. What besides a finished zigzag? Anybody? What else can an ABC 5, 3, 5 zigzag be? Potentially be? Well, it can be waves 1, 2, 3, and 4. It could be 1, which that's the way I'm counting it. 1, 2, 3, 4. Now I'm counting a little different on the way up here, but notice if that is wave 1, you move across this pink line here, it still hasn't crossed over into that price territory yet. So this could be a 1, 2, 3, 4, and then you get your 5th wave up into late in the year to new all-time highs. And that's basically my main count. And then I've done some Fibonacci work here. This wave 5 green would be equal to wave 1 through 3 times 0.618 at 36.13. And it hasn't quite hit that yet, but it's close. It's very close. The low tick so far is 36.36. And then I also remember how I was on a diagonal. Each leg of a diagonal typically retraces between 66 and 81% of the initial leg up, and each leg is typically a zigzag. So what I did is I drew a Fibonacci target zone for the end of wave 2 on this wave count down here, and looking for a minimum 66% retrace. And if you do that and you develop this target zone around 2865 target, that's a 0.66 retrace of the initial 5-wave up, then you can cut this move down by the golden section and look for the initial 5 waves down to be approximately this entire distance here times 0.618. And that target is at 34.94. So there's the target zone if this wave count is correct. And then the next move would be back up to the wave 4 of 1 lesser degree. And if we use that one repin, that would be up through November 4, early November. So notice all 3 counts that I'm showing you are expecting a bounce. And even if this is the most bearish possible situation to the downside, and it's a 5-wave structure for a wave 1, there's after 5 waves down, you usually get a bounce back at least to the wave 4 of 1 lesser degree. And if it was a leading diagonal, deeper than that. So there's the 3 wave counts that I'm showing. All of them are expecting a bounce soon. The one caveat I will give there is that if you do the repin that David Hickson is doing, this won't finish its downward movement until approximately July 18. July 18, and then it is bullish up into early November. That's from this little gray thing here up to this gray arrow here. That elections, oh, of the midterms, yeah. Yeah, who knows? So anyway, there is, and I'm going to make a very small note there of July 18, and that's one repin composite line. I'm going to make that gray. And then this gray one up here is November 4. So no matter how you shake it, there should be a bounce coming. But if you are David Hickson, you're waiting for this to move a little bit lower for probably another 3 weeks or so before it moves higher. I will say this: Hickson in his last video did say that this was in the window, the one repin analysis. Okay, so here's the one repin analysis. There's one thing that really steps out to me on this one repin analysis, and that is how much different price is than the composite line. That usually means that this analysis is wrong. When you get that much of difference between what the composite line is suggesting and what price actually occurred, that usually means that's not a great analysis. But this is still what he's doing, and the reason he's doing it is he just doesn't think that an 18-month cycle could possibly be that long. Well, let's look back in history and see if we can find some additional. We're looking for these yellow, that's an 18-month cycles, some of them to be very large. Well, don't have to go back very far to find it. Here's an 18-month cycle back here that lasted from August of 2013 through February of 2016. And then here's one, and this is notice there's no repins back here affecting these. March of 2009 through October of 2011. Well, that one right there, March, April, May, June, July, August, September, October, 7. Is that right? March of 2009 through October of 2011. That is 2.5 years. That is a 2.5 year, and there's no repins there. And so without doing this repin, we'd be looking for a similar size 18-month cycle to what occurred right back here. And you can find other, and so the rare 18-month cycles that are that long are rare, but they're not impossible. If it was impossible, the no repins analysis wouldn't be suggesting that we're going to get an 18-month cycle trough now. But you can see this move to the downside. That this is basically the composite line that David Hickson is looking at. And what he mentioned in his video was this has moved down enough now that it's into the zone where you would get a 40-week cycle trough and a 20-week. So it's possible that it's bottoming now, associated with the 40-week and 20-week cycles. Okay, I've taken a long time with all of that. I hope you all appreciated the extra work I went to on this so that you would see all of the potential counts that three different counts that I think are worthy of consideration and why I prefer the ones that I do. So this is September of 2024. So the problem with this count, biggest problem with it is Hurst thinks that it will move down. If you do the one repinned, it'll move down from November 4 of this year all the way down into September 2024. So that really doesn't support this wave count. Daily chart. Here's all the details about the move to the downside. You know, the S&P is down 24.5% from the top tick, all-time high, to the bottom tick so far. You can see this potential diagonal. One of the diagonal, 2, 3, 4, 5. The throw over of the line connecting 1 and 3. And so it would be time now for a reversal. If this was a leading diagonal, it probably wouldn't move any lower. And then my main wave count that down from the high in November of 2021, 3 waves down for a W, 3 waves up for an X, 3 waves down for a Y, 3 waves to the sideways for an X, and then a 3-wave structure, an ABC zigzag down to finish it, and therefore the end of a triple zigzag. Okay. You'll get those screenshots and can then examine them more carefully. The Algo recently, it took profit after the Wednesday candle last week, and price moved a little lower, but you can see these indicators are looking rather bottomy right here, the Walter Bressert, as well as the daily sentiment index, and it appears to be really close to crossing over with its 8 period simple moving average. Is that right? Make sure that's right here. Yeah. And then let's see. The and another thing about that Algo, look at the size of this winner that it just picked up. By shorting the S&P, almost $20,000, one contract. Did not get stopped out. It's these enormous winners that offset all the little losers, and cause it to end up bringing in profit, and historically pretty solid profit. For instance, just going back one more thing on the Algo for premium plan subscribers. Over the last 3 years with these settings, it brought in $114,000 worth of profit, and it only needed a count size of 18,000 to start. So I'm going to very quickly on the Algo for premium plan subscribers. I'm going to look at the data. Instead of having the data end March 31, like the back test, I'm going to have it end at the end of last week. I'm not going to change any of the settings. I'm going to run it again and it still would have brought in $130,000 over the last 4 years. And here is the equity curve of over the last more than 3 years, starting back around the beginning of 2019. That's how the account size grew, the red line, and it had flattened out through some of this year, but now it had this huge winter that's pushed it way on up again. And so I wanted to take this chance to show you before I do the back testing. I mean, I'm going to re-optimize this algo starting July 1, that it continues to put up huge profits over time. And it, frankly, it's kind of a dumb algo, because it looks at every potential momentum move as a potential breakout. And of course, not all of them are. Sometimes they're head fakes. Sometimes you make a little profit on them. Sometimes they get stopped out. But once in a while, you get an enormous move out of it, and it's what makes the whole thing worthwhile. So it's continuing to put up good numbers. And that big winner there just helped, because it had not really been able to pick up any big winners lately until recently. Sentiment conditions, I would say, are still bullish. The DSI got as low as a 7 recently, and on June 15, there was a green candle suggesting that we're in the neighborhood of a significant reversal, because all the commercials were long. Retail was heavily short in single digits. And we even have the daily sentiment index higher right now at 13 than it was back on Monday of last week. So this looks like it wants to bottom here. So Hurst is calling for a correction now, and it's calling for a correction down into an 80-day cycle trough. And I talked about this last week. Within this 80-day cycle, the 40-day cycle came in very early, and that's bullish. But you have to consider the possibility that maybe that 40-day cycle was right here, in which case we would get potentially a correction lasting into early September. Okay. Let me see if I have this drawn on the 240. Yeah, I do. So this, I think, can count as a 5-wave structure to the upside. Notice the 200-day moving average. So price is moving up to the 200-day moving average. So there's a lot of really basic technicians that are that feel that the 200-day moving average is very important, and that it has been thoroughly broken, and price is going to move up to it, find resistance now. And I think that's right. I think in this particular instance, that's what we're going to see. You'll notice on this daily chart that we have reached overbought territory on the RSI on a daily chart now. And we're also very close to the 200-day moving average. The 200-day moving average is at 33,905 currently. So on the 240-minute chart, this has been a pretty relentless rise. And I also showed you last week why, if this is wave 1 and wave 2 in green, a typical wave 3 would be where 1.618 times the length of wave 1, and we're just now arriving at that level. And so I have labeled, and that level is at 33,900. So we're just now getting there. Haven't quite tagged it yet. So that would be a normal actual wave 3. So you might ask, well, why are you labeling it the way you are? And the reason is because I think I can count 5 waves up into that peak on August 1, and then a brief wave 4. And this looks like a 1, 2, 1, 2, 3, 4, 3, 4, 5. It's in the wave 5. So this roadmap has been working very, very well. I think we can consider the upward movement to be impulsive. As a matter of fact, the downward movement from the all-time high took about 5 months to complete, and this move to the upside is only 2 months underway, and so it's actually been and it's now retraced, and this is important, very close to 61.8% of this downward movement. So if you're a big fan of the bearish alternate count, that this was a leading diagonal, we have now moved up in some would label this as an A, B, C. And that gray line or little blue line right there, that is the 0.618 retrace of the entire downward movement from the all-time high in early January down to the low in mid-June. That is at 33,973. So I would expect that some of the bearish Elliott wave counters that might be counting this as a leading diagonal would be satisfied that this is this would be a wave 1 in blue, that the wave 2 in blue is nearly over, and they want to start getting very, very bearish here. Just because it's nearing a Fibonacci target. Now, Hurst, with no repens, does not agree with that. Now, it does agree that we're probably going to get a correction over the next couple of weeks or so. Notice the composite line expecting a top on around August 11, and a move down through August 26. That's what the composite line is saying. But a typical 80-day, if this was going to be a typical average 80-day cycle and equal to the average of the last 6 80-day cycles, the downward movement would last all the way to September 16. So there's a window down here. So I was saying that this movement up this time is not riding on the back of bullish glee due to stimulus. And therefore, and I'm expecting, my main count is expecting a pink 1, pink 2, and on up. Um, 3, 4, 5 up to that very important large degree top. So if this is pink 1 and we're getting pink 2 here, I'm not necessarily expecting this pink 2 to be a shallow wave 2 because there's no stimulus backing this thing up. So it might be a normal wave 2. So what is a normal? What is a normal wave 2? I would say a normal wave 2. Let's say we've seen the top tick. A normal wave 2 would typically go down at least 50% and would typically end somewhere between a 50% and a 61.8% retrace. So that would be back to 31,650 down to 31,150, somewhere in the mid 31,000 range. So that's a loss of over 2,000 Dow points is what I think would be normal. Next, let's see, delete. So I think we're on the cusp of that move. We're very close. Notice that we're overbought on this 240-minute chart, but notice one other thing. We don't have divergence. We don't have a typical 3-5 divergence here. The wave 5 the wave 4 was so brief that the pink wave 5 was able to make a new high on the 240 minute above the high at the green 3. So we don't have any divergence. So what do we have? We have the 200-day moving average providing resistance. We have the 0.618 retrace of the entire move down from Jan 5 to mid-June, and we have that coming in right here, that light blue line, and we're within an eyelash of that. So that might be a meaningful retrace level for the bears. Let's see what else we have. Okay, on the trend chart, there's nothing really telling us that we are in trouble on this up move on the daily trend chart. But when we go to the algo, there is an important development on the algo screenshot, and that is that my synthetic retail sentiment indicator on Friday has reached overbought.